All right. Hello, everybody, and welcome to our webinar today. I'm really glad everybody could join us. So today in our training, we're going to be talking about business credit scores. We're going to be talking about everything you need to know. Okay, there's about a handful of credit scores from each one of the reporting agencies, Experian, Dun Bradstreet, and Equifax. I'm going to teach you how they all work today. I'm going to teach you how to control them all because some of them are used to get loans. Some of them are used to get credit cards. Some of them are used to determine the interest rates you should pay on certain things and rent and insurance and all these different factors that are all tied into your business credit quality. So we're going to decode these scores today, talk about how they work, talk about how you can control them. And on top of all of that, we're also going to give you some information on how you can successfully build business credit as well. Thanks everybody for tuning in for both Facebook, Periscope, and YouTube, all three, and coming into our webinar. And a lot of hellos here from Amanda, from Tamiko, from Kevin, from Seth, from Reginald, from Tamiko. So thanks everybody for tuning in on the webinar. So what we're going to cover today, we're going to cover 5 business credit scores from Dun & Bradstreet you really need to know about, how your Experian commercial credit scores work. We're going to talk about that as well, how to build credit with Equifax. It's very hard. Not a lot of people report to Equifax. We're going to talk about that. We're going to talk about a little bit about your FICO small business score, FICO SPSS, and how that works. We're going to talk about how you can control all of your credit scores. And we're going to talk about why you'll have failing credit scores with no credit and how you could fix that problem and how to get the best rates and terms on financing. These scores, these reports are used to determine if you should be approved for financing, how much you should be approved for, and the rates and terms you'll pay. We're going to talk about how to get the best financing using these scores to do it. A little bit about me. Don't talk about myself a lot, but I've got now 20 years in the financial industry. I've written the 2 of the best-selling books on commercial and consumer credit, Perfect Credit and Business Credit Decoded. I'm featured on TV interviews, podcast interviews, Forbes, Entrepreneur Magazine, and I am blessed enough to have an opportunity to oversee the largest business credit coaching division in the United States. I don't say this stuff to brag. Anybody that knows me knows I'm a very humble guy. I just say this because I just want you to know that I have the knowledge that I need to have to be able to come and talk to you about this today. Nothing I'm talking to you about today is theory. It's all based on us helping about 45,000 customers through this process over the last handful of years. So are you in the right place? Well, today we're going to be talking about if you're just getting started out and aren't sure if your business even has a score. We're going to talk about today, including how you can get a free business credit report. If you've been in business for a while and have been getting reports, but you're not sure what all those numbers mean or how credit scores are determined, then you're in the right place. If you want a good business credit score, that's important to you. If getting the best rates and terms on financing is important to you, if not having established commercial credit is holding you back and not permitting you to get the money you need to really thrive and succeed, we're going to be talking about that today. And if you want to get the best terms on money and you want to beat the banks, all of these are going to be topics we're going to talk about today. It's so wildly used. Your credit scoring is used for insurance you get. It's used for loans, credit lines. It's used for credit cards. It's used from suppliers. It's used when you get a lease. It's used for so many things so many of us don't know about. And by fixing these things, the whole world becomes your oyster, including getting much higher approvals on loans, credit lines, and business credit cards. It's all going to happen today. So we'll definitely be talking through all of that. So bonuses, if you are staying to the end, we're going to give you a playback of this. If you're attending the webinar, you don't need a playback. If you're attending live, because you can go to your channel of choice, Facebook, YouTube, or Periscope and get it. We're going to give you 30 days of business credit monitoring. I'm going to teach you at the end how to get this with Dun & Bradstreet, Equifax, and Experian. I'm going to get you 30 days of credit monitoring with all and a no credit consultation as well. We can give you tips and tactics and talk about fundability and all those things. I'm going to teach you how to get all this. If you stay to the end, you're going to get all these bonuses as well. And we'll dive in. So business credit. Remember, we were talking about here credit that's in a business name. We're talking about credit scores that depict a business's risk of repaying its bills, not you. We're talking about building a separate credit profile with separate scores than your consumer report and score and using this one to fund your business so this one doesn't have to be used. It's the key of getting away from personal guarantees and liability, getting away from personal credit checks and inquiries on your consumer credit. It's getting away from having credit cards reported, your consumer credit reports that you and I both know are you being used for business. That's what business credit does for you. It's the only legal way you can really have 2 credit profiles, one for you as a consumer, one for you on the commercial side. And it's very important that you understand how these scores work because your business credit scores can be the difference between getting financing or not. As a matter of fact, NAV released a survey that people are 41% more likely of getting business financing when they know about their business credit scores. That's mind-blowing. Like, Think about that. Just by being here today, within an hour, you're going to leave and have information that makes you 41% more likely to get loans and credit lines. That's what knowing your business credit does. And that was a survey featured on NAB. It was on Forbes. It was on Inc. It was an Entrepreneur Magazine, Fast Company. Everyone featured that. Business credit reporting agencies record how fast you pay your business debts, amongst other things. And the idea ultimately is just to predict two things: to predict your likelihood of ceasing operations, closing your doors, going out of business. And secondly, to predict your likelihood of paying bills on time. That's what your scores are mainly used for, to determine these things for lenders and for credit issuers. So understanding these scores is really the first step in improving your chances of getting funding. I talk a lot about what's called business fundability. And fundability has to do with all these crazy things that lenders and credit issuers look at to determine if you should be approved for money, how much you should get, rates and terms you should pay. Of all these 125 fundability factors, the most important of them we're going to talk about today, because that's what commercial credit scores are. They're really one of the main factors that's used by these lenders and credit issuers to determine all those things, if you should get money and how much you should get. So let's start with D&B. But before we do, I just want to say hello, Norma. Thanks for coming in. John, thanks for coming in. Melva, thanks for coming in. Shinada, Wathira, Robert, Ronald, thanks for coming in. And Ramona, thanks for coming in too. And Ramona says, why did it stop? I think it's a tech issue on your end. And Steve from Facebook coming in. Car Tub Detailing. I love that on YouTube, because now I'll say your name constantly every time you say hi. Would like to talk with you offline about why I left you. Okay, why don't you come in? Raphael, you feel free to send us an email, or send me an email direct, info@creditsuite.com. You can get that information to me. Richard, thanks for tuning in. Chili, thanks for tuning in as well. So let's talk about D&B. And hi from the DR, Dominican Republic, but live in Philly. Hey, Jerry, thanks for coming in. Hello, Corey. Hi, Wilton. Hi, Tyrone. Everybody, thanks for stopping in. I appreciate everybody coming. So Dun & Bradstreet credit scores. D&B has 5 different credit scores. Paydex is the most popular credit score. The other 4 are D&B rating, delinquency predictor, financial stress score, and what's called the SIR, or the supplier evaluation rating, all of which we're going to be talking about today. But you're not going to get a Paydex score. Let's start there, unless you have 2 things. You have to have 3 accounts reporting to D&B and a DUNS number to ever be issued a Paydex score. It's a big deal. The Paydex score is the most commonly used score in the business area. This is used for leases. This is used for insurance. Lenders, credit issuers, they all use it. So you want to have that Paydex score. And remember, you need to have a DUNS number and 3 accounts reporting on your business credit reports to have the Paydex score. It's required. If you don't have those, you're not going to get a Paydex. I get that question a lot. Why isn't D&B reporting my credit? They are. They're just not going to give you a score unless you have those 2 things. So again, when we talk about Paydex, this is Dun & Bradstreet's dollar-weighted numerical rating of how a company pays its bills over the last 12 years. So, or 12 months. So let's talk about a couple things. A lot is actually being said in this one sentence. First of all, dollar-weighted means that the highest limit accounts have more weight into your score than lower limits. So if you ever have to go late on an account that reports on your business credit reports, always go late on the lowest limit account, because that will have less weight into your score than higher dollar accounts or higher limit accounts. So that's what dollar weighted means. It's very important. How company bill pays its bill over the last year, very important as well. Consumer credit scores gauge your risk of going late over the next 2 years, 24 months. Business credit scores are all over 12 months or 1 year. And the reason that's important is that it's more forgiving in the commercial world. If you screw up, you make mistakes, you drive your scores down, it's easier to recover because we're looking at your risk over the next 12 months. So if you have a bunch of problems and then have 90 days of recovering and positive, well, then your scores are going to be way higher than they would be in the consumer world, because the consumer world, they're looking at your risk of going late over the next 12 or 24 months. So like if you had anything, even months ago, it still means you're a pretty good risk of going late sometime over the next 2 years. So 2 important things from that sentence. Now, D&B bases the score on trade experiences reported by various vendors. So this is all based on people that report to them and how you've paid those bills. So D&B classifies this 2 different ways. They have what are called performance scores. It just scores you based on past performance. That's what a Paydex score is. It's looking at how you paid your bills based on information from trade vendors that report to D&B, people that you pay like Uline or Quill or Amazon or Walmart. They report those payments. Then D&B creates the Paydex score based on an average of how you pay those bills. Okay, that's what it means. Now, the other category of scores with D&B is known as predictive scores. And these aren't based on all your performance. Some of your performance stuff ties into predictive scores, but they are literally to depict or predict your likelihood of something happening, going late, going out of business, etc. So this is a performance score. It's based on how you've performed in the past, how you've paid your bills in the past. Now, your score ranges from 1 to 100, with 1 being the lowest score and 100 being the highest. Okay. And the goal here is to be able to get the highest score by paying your bills on time or early. I'm going to say this once. It's important to note that your commercial credit scores, you go late. The day you go late, you are considered late. Consumer credit, we have 30 days we could pay late before it shows on our credit report. In the business world, they start classifying you in categories called DBT, or days beyond terms. And the minute you're 1 day late, you are 1 day beyond terms. You get put into a category stating that you are paying your bills late. So it is very important, as you'll see with all the scores we're going to talk about today, that you pay those bills on time or early. It's very important to being able to get the result that you want to get. And David says, how long will it take to get cash on a credit card? To get a Visa card or a MasterCard, what I call cash credit, not credit lines, a Visa card or MasterCard. If you're working with Credit Suite, our clients get there in about 6 months. Sometimes 9, depending on the client. If you're doing it on your own, we've surveyed a lot of clients. We see it's 24 to 36 months. So if you're doing this on your own, following our free training, getting our group, et cetera, it could take you 2 to 3 years to get there. If you're working with Credit Suite, kind of the streamlined process, you can get it as little as 6 months. That's based on all of our survey data to give you that information. And David says, what's the fastest way to get things going? Look, if you're working with us, you're going to get the fastest result. If you're not, follow our free training on place like YouTube. You're tuning in from YouTube, and we'll give you all the steps. You can also join our group, Get Business Credit. But keep in mind, they're all novices there. Everybody's sharing their experience, typically from one of their companies they've built credit for. So, take that advice, lightly. But again, it'll give you some guidance there that'll help you. Hello, says Vivian. Shanada says, can I use a virtual office? You can, and a virtual address is a great idea to build business credit. But D&B will not accept that for some reason. They won't accept a virtual address, is something to keep in mind. And Miss says, greatness, everyone, from Miss LA. Miss LA, thanks for tuning in. Appreciate you coming. Okay, so D&B's rating is the next credit score we're going to talk about with D&B. D&B bases this rating on a company's net worth based on financial statements, as well as the company's overall condition. I'm going to stop right here because it's really important. Most people don't even know you can supply your tax returns to Dun & Bradstreet, and you can. And whether or not they have them or they don't will put you into one of 3 categories that D&B has. So D&B's rating, and I'll give you some more info and I'll break it down, but you just need to know that if you have good financials, if your tax returns are healthy and it shows growth in your business and you're getting some kind of profit, supply those financial statements to D&B. You want them to have it because it's going to give you a better D&B rating. Now, if a company's financial statements are not provided, the score is based on company size, industry, or other related factors. Extremely important here. Extremely important. So many of us file annual reports with our Secretary of State. And one of the simple questions they ask is the number of employees we have. And none of us think anything about putting that answer there. But what you need to know is that every bureau, credit bureau, Experian, Equifax, and D&B, they all have a score that takes into account the number of employees you have, the size of your company. So you need to be cautious. I'm not saying lie at all. I'd never say that. But what I am saying is that when you see that answer of how many employees you have, you need to think about it, because the lower number you put, the more adverse impact it has on your commercial credit scores with D&B, Equifax, and Experian across the board. As a matter of fact, Experian and Equifax will give you failing credit scores if they don't like your demographic, if they don't like your number of employees, and they don't like your industry code. So very important here. So what D&B is saying is, if you give us your tax returns, we're going to put you in one category of the rating. If you don't give us the tax returns, we're going to put you into another category, and we're going to make the decision of your financial health based on the industry you're in and the number of employees you have. So if you're in a high-risk industry, you've already got serious problems with your D&B rating. If your company size is small, you're just starting up, you're less than 5 employees, you've got serious problems with D&B's rating. So some things that you have to keep in mind there, because again, you decide this, you determine if they have those financials or not. If a company doesn't provide any of this info, then D&B will base it based on other information related in their file, and a company will get a lower rating if no information is provided. Bottom line, 3 categories. They have your tax returns, they don't, but they know your industry and size, or they don't have any of that stuff. And then they look at what other factors that they do have. And what information they have puts you into a separate category on your rating. So if they have your tax returns, you're in one category. If they don't, you're in another. If they don't have any, your employer or nothing, they put it into a third category, telling people that are using the score, look, we just don't have much information on this company, or telling them, look, we have the tax returns. We feel pretty good about this score because we have their financial statements. So if you have the financial statements and they're solid, get them to D&B. It's going to help your D&B rating. If not, you need to know. Your industry and company size is going to determine those things as well, okay? And Cartub Detailing says, you guys saved us a lot of time in the building process, even with your free content on here, and we appreciate that. Guys, look, I'm not going to spend a lot of time here, but I lost my butt in the mortgage crisis. I owned a mortgage company. I lost it all. I lost everything. And as a result of that, years later, I found business credit, and that's why I teach, because it completely wiped me out financially. And if you all would just take the advice I'm giving and go and take it and do something with it and build your business credit as Cartub Detailing is doing, then you're going to not have those problems. You're not going to be guaranteeing all this money in your business, and it won't wipe you out personally when something comes out of the blue like COVID has come. So I'm glad to see that I was a positive impact there. And Benjamin, Ivan shared Benjamin as well. Marcus says, so if you're going to use a virtual address of the business because we have a virtual address with no intention of getting a physical address, how can we get around this for fundability? You don't. You use that virtual address everywhere. And this is what we do, okay, at Credit Suite. And I'll tell you why. We had an office down here, okay? We had an office, then we shut it down. Then we moved the address to our Washington office, and we're shutting that because we don't need them. We don't need these offices. We're like everybody else. We've realized we could go virtually. So we've had to change this address in all these places. It's a nightmare. Now we do what we tell everybody to do. Just get a virtual address. You have one address. You can move 20 times and not change your address. So just get that address and use it on all of your documents. That's the answer, Marcus. And Joanna says, what if you are only a caterer or food truck services? How can you get business credit cards? Follow the exact same steps I always teach to build business credit. We don't talk about the steps in this training, but if you follow our webinars, follow us on Facebook or YouTube, you follow the same steps. You just need to set up your actual entity. And how do you get your taxes to D&B, Kimberly? You can go right through their new portal. I have to get used to saying I update. They always used to call it I update. Now they have a brand new portal. You can go to D&B. Even if you use their monitoring, you can update that information and send it right up to them. So you can go to update your company's information, update anything that's wrong, and then send that information right to them through that dashboard is what they call it. Used to be I update. And Robert says, I've been using methods and was able to get Verizon Business last week. Congratulations. I started my business in June. I followed your steps. Thank you again for sharing the knowledge. I'm glad to hear your success. Congrats. And Richard says, Ty, with your service, do you get the setup for client available A to Z? We can't do a lot of the work. Building business credit, as you can think about, is finding a credit card you want, applying and using it and paying the bill. So a lot of that stuff we can't do, but we hold your hand and walk you through the process. And Ishmael says, can you get a Net 30 account with Uline with a virtual address? You absolutely can. We recommend virtual addresses. And Reginald says, I use WeWork. How do you get utility bills in your company name? You don't if you use WeWork because you don't have any utilities. So there is no bills in your name. So that's not possible if you use a WeWork from everything I understand. Okay, so delinquency predictor. This is a score from D&B that runs from 1 to 100. The higher the score, the better. Predictive scoring only represents a statistical probability, not a guarantee. Remember, I taught you the difference between performance scores and predictive scores. This is a predictive score with D&B. Scoring system ranks accounts based on the probability of late payments, but a new company has no historical information. So they look at proportion of slow payments in recent months, proportion of past due balances to total amount owing, higher risk industry based on delinquency rates for your industry, increase in proportion of delinquents payments and recent payment experiences, and evidence of open lawsuits. So several things I want to point out. Lawsuits are on your commercial credit reports. Boom, not used to that in the consumer world. Absolutely the case in the commercial world. Second thing I want to teach you here is I cannot tell you enough how important your industry code is. I address this in training after training after training. If you go to NAICS code, just Google NAICS code. There's like NAICScode.com. You can find your NAICS code. You need to figure out what your NAICS code is. Whenever you're filling out a loan application or a credit application, when it asks for your industry, it's a really big deal. Stop just putting whatever, consulting, blah, blah, blah. Don't do it. Because what happens is when you put that, you think nothing of it. But they have to categorize your business in an NAICS code. And the minute they do that, that reports to the business credit reporting agencies, and you're going to have a report with a bunch of NAICS codes on it. So why is that problematic? You're already starting to see that in lieu of other information, we don't have the tax returns, we don't have payment history, we don't have this, they default to your industry code. They start looking at how your industry performs. So much of this commercial credit scoring is based on your industry. What if you have the wrong NAICS code? A lot of these scores, as you'll see with Experian, even compare your business to other people in your industry. So much of this scoring in the commercial world is comparing you against others in your industry. If your industry code is wrong, it creates all kinds of issues. So you've got to get your reports, and I'll teach you how to do that. You can go to creditsuite.com/monitoring to do that. It's only $24 for all three: D&B, Equifax, Experian, $250 with them direct. You can't even get Equifax reports right now from them. Don't know why, but you can't. So it's $24. See if anything's on there that's inaccurate. See if you have multiple NAICS codes. If they're not your right code, dispute it and get it fixed. And all applications for loan, credit, tax returns, everything in the future, when it asks for industry, you need to say, I am this industry, exactly what your NAICS code industry is, and the NAICS code itself, so there's no confusion. So fix the underlying problem by disputing, then choose the right NAICS code. It's a serious issue. You need to make sure that you do this. Octavia says, my husband and I have 3 ideas in mind to start a business. Do you find any of these sectors easier than others? That's a tough question. Home care, janitorial, or medical billing. Octavia, I can't speak to that. On the ease of starting a business in one industry or the other. I would if I could, but it would just be subjective, personal, and based on the information I have. And I don't have enough information on any of those industries to give you really good advice. So I'm going to defer. Letitia says, I submitted a request to add more employees, but was denied. Why? I don't know, but you'd have to usually they give you a reason for that. And oftentimes the reason for that is that they got the information that they're reporting from a third-party service. That third-party service is their Secretary of State. My advice is correct it with the Secretary of State, then go back. Then if they say, we already verified this, we can't change it, then give them your Secretary of State record to show that they have it right and say they have it right. That's where you're getting the information. You have it wrong. Please update it. And they'll typically fix that. And H says, I'm not a U.S. citizen. I have U.S. LLC and business personal bank account. How can I build business credit? Follow the same steps we teach. It works. Just you're going to use a TIN number instead of your social. But you can get this without an SSN. You can build all this with just an EIN, but they're going to ask for your verification in some cases to verify your identity. You just use your TIN number there. Okay. What was the website to check your credit score? Again, it's creditsuite.com/monitoring. It's at the bottom of our slides. Tony, hello. Thanks for coming in from Facebook. And Chamoa from YouTube says, how about Amazon that allows you to do their business with you? And when the business starts growing and change to LLC. So why can't you get money then later change? You can change your entity at any time. You just need to go to your accountant typically to do that. And Remy says, how does SBFE work with D&B? So the way that SBFE works, SBFE is Small Business Financial Exchange, third-party data aggregator owned by lenders, and they have D&B, Experian, and Equifax, and LexisNexis are what are called vendors, and they're the only ones that can take SBFE information and publicly make it accessible. So that's the role between D&B and SBFE. Is D&B is a vendor, and some of this information you see on your business credit reports comes from SBFE information, which comes from your loan performance with banks and applications, et cetera. The financial stress percentile score with D&B ranges 1 to 0. 1 is the worst. It's the highest risk. It's a comparison to other businesses. I just told you that a lot of these scores compare you to other industries in your businesses in your NAICS code. If you don't know what an NAICS code, it's an industry code that the IRS uses to recognize your business, to see what industry you're in. And the reality is the IRS uses it because they just want to make sure the expenses you claim on your tax returns are common for that industry. That's what they're using it for. They're just making sure that you don't show expenses that are outlandish compared to others in your industry. So that is what it's used for, just so you actually know. Okay. Pull up my Slack there. I was just trying to actually shut that down. Is based on much higher raw score than the financial stress score. And there's a financial stress score and a financial stress percentile. And the difference is the score is the score. The percentile is where you rank to others in your industry. So that's the difference between the score and the percentile. But again, the score ranges from 1001 to 1875, with the higher score being better. The score is based on low proportion of satisfactory payment experiences to total payment experiences, high proportion of past due balances to total amount owing, UCC filings reported, and a high number of inquiries to D&B over the last 12 months. No clue why inquiries was spelled E-N here instead of I-N, but who knows? The score compares a company to similar businesses in the D&B database. So again, score, percentile, we're comparing to others in the industry. The financial stress score is literally used to depict your risk of filing bankruptcy over the next 12 months, ceasing operations, stopping doing business altogether. And that is the 4 factors that it ties into. So UCC filings is a big deal. When you get a loan in the business space, they file what's called a UCC filing on your commercial credit report to tell others that you have an outstanding loan. Keep an eye on that. Things like that tie in to this kind of score with the financial stress score. Now, the SIR rating is the last score with D&B. It's called the SIR rating, the Supplier Evaluation Risk Rating, 1 to 9. 1 means a company is least likely to fail. So 1 is actually a better score here. Factors affecting a SIR is negative net worth. Again, they get that from your tax returns. Proportion of slow payment experiences to total number of payment experiences reported. A lot of slow pays. Business belonging to an industry with above average risk of ceasing operations. See, again, they're giving you a low score just based on your industry. You guys see this? I mean, if of all every score I've shown you so far, industry is tallied into the calculation. It's why your score is so freaking important. Because if you don't, you are being misjudged across the board from everybody that you want to get money from. Okay, and they're holding it against you. Especially if they don't have this other information. This is one of the biggest reasons I see failing scores. The bureaus don't have a lot of info because people haven't focused on building business credit like they should. And so the bureaus default to whatever they can get. They default to number of employees. They default to industry code because this is readily available. Every time you fill out an application, they get that. It's with your Secretary of State. So they're defaulting again and again and again to 2 things that you pay little attention to: your industry code and the number of employees you have. And that's why the number you put on that Secretary of State record of employees you have is a big deal. And also the industry code you choose is a big deal because you are going to be judged harshly against what other people are doing in your industry. So some things to keep in mind there. Okay. And Dane says from YouTube, can I get business funding if my C Corp is located at UPS physical location with a suite number? You can, but you need to know some sources won't approve you. Some lenders won't approve you. Some credit issuers won't approve you. There's a database that houses those kind of addresses like UPS addresses. All lenders and all credit issuers know that you are using a UPS store. And you and I all know that, it doesn't make you look very credible if you're using a UPS store versus a virtual address. So my advice, get a virtual address right away. Some lenders, some credit issuers are going to approve you with UPS. A lot won't. So if you don't want to keep getting turned down and not know why, and that be the reason, I would switch to a virtual address as soon as possible. And Dane says, there's still no doc CC approvals that did the pandemic. No, we do have no doc. We have a credit line hybrid, 150,000, no doc financing, 0% rate. It reports to the business credit reporting agencies. It's based on good consumer credit, a 680 FICO score higher. But if you have it, give us a ring, 877-600-2487. Our number should be on the bottom of these slides. Right there it is as well. Give us a call. We'll talk to you more about that program. Okay. And then we got a bunch of questions here on the webinar as well. Okay, so give me just 1 second here, guys. And can a partner to just help search? Okay, I'm sorry, guys. Give me just a second. I have a bunch of questions that came in that I've fallen behind. Okay, so what is high risk wood furniture manufacturing? It's not. There's all kinds of training we've done on high risk industries. Check our YouTube with that. What's the safest industries? There's you got to keep in mind, there's hundreds of them. It's too many for me to say here. What do we do when the codes change, especially for the beauty industry? Then update the code, but the code shouldn't change. The SIC codes came out. Now NAICS codes came out, and you should have one code. Those codes don't change. Is the healthcare industry high risk? It's not. In the lending world, does this help with starting an insurance agency? It does. Salil says, can a partner post false negative report to D&B if we have a disagreement on service contract? Does D&B have any way to verify a report before accepting it? Email us or call us on that question. It's too complicated to answer here. I don't think I properly understand it. I've literally just opened my LLC. What should I do first to get business credit? Check our YouTube channel. All the step-by-step is there, but you're going to start by improving your fundability. I'm on your credit monitoring service. Should I pay for the 3 creditors outside of this to get a more detailed report? Not unless you see something that's concerning. If you see something concerning, pay for a deeper report. If not, don't. I tried to update my code, but on Experian, Dun & Bradstreet won't let me. They all let you. You just have to dispute it. Sometimes they'll come back and say they won't. Then I take the other bureaus and the Secretary of State. I verify they have it right. And then as a result, I see it corrected. That's the way to get that done. Curtis says, I do kitchen exhaust cleaning and I have no ideal code. You got to find the industry that's closest to you. Jeffrey says, so manufacturer, retail, wholesalers, that's better. Yes, it is. Is there a difference between building credit for a new business versus an existing? There's not. I know you went over the virtual office thing, but even in this day and age, a brick and mortar would be preferred. Yes. But if you can't get a brick and mortar, virtual address is your second. Okay, and what's the best virtual address company to use? We use Alliance. You can go to creditsuite.com/virtual to be able to find that. If you work from home, I recommend a virtual address. And Creative says it's harder to get commercial credit when the corp is owned 50-50 between people. It's not. That it doesn't even matter. And do I need to switch from SPA to LLC for business credit? You should always stay away from a sole proprietor. Yes, you've got all kinds of problems there, including a likelihood to get audited. So maximum credit recommendations, well, it includes recommended dollar guidelines of how much money somebody should lend you. D&B performs an overall assessment of a business over the next 12 months. They also check the predicted risk of business's discontinuation. Further, they look at predicted risk of severely delinquent payments. And D&B bases its dollar guideline amount on a historical analysis of your risk. That's how much they determine you should be issued. So every credit report says how much money you should be issued, recommendation of credit, and that is controlled by all these factors. So if you want to know how D&B determines how much money they recommend you should be lent, there it is right there. That's what lenders and credit issuers see, and that's what calculates how much money you should be lent. A recommended limit is based on the probability of you going late in the future, but there's recommendations, no guarantee that a business can cover the recommended amount. So every bureau is going to say what they recommend you be lent or issued in credit, and that's how they calculate how much that amount should be. So if a lot of you are asking questions about building business credit to show you kind of an idea of what's possible, I wanted to include this as well. Here's one of our clients, Christine, just to give you guys an idea of what happens when you're building business credit. She's now secured over $1 million in credit without a guarantee and credit check, but you're starting with these small $2,000, $5,000, $10,000 accounts after you get vendor credit. Then you start to move to $20,000, then you move up to $40,000, $50,000 limits. So this is what's possible once you're building business credit scores. And Christine, like many, really spends a lot of time focusing on building her business credit. She went from a 1-truck operation. The last time her and I spoke, she was buying a 50-truck operation and did it all based on the quality of her business credit. She even came in here in one of the webinars recently. It was cool seeing Christine. And as she says here, if you follow Ty Crandall's program, you'll get what you need. A lot of people are chiming in saying the same thing. Guys, I didn't invent this, okay? I didn't. I just figured out that it existed and big businesses were using it. And we just provide the training to be able to, for small business owners to be able to have the same results that big business owners do. So let's talk about Experian. Business credit depends on how well a company pays its bills, but Experian uses both consumer and commercial credit to determine this. We're going to talk about blended scores in a minute. And per them, by combining personal and commercial credit information in one report, Experian provides a complete picture of the creditworthiness of a small business. Don't worry. A lot of their scores are not blended. One of them is. I'm going to talk about that today. Their Intelliscore ranges from 0 to 100. It's a percentile score. Again, looking at how you rank against other segments of your industry. 0 represents high risk. 100 represents the lowest risk. It reflects the percentage of businesses scoring higher or lower than specific businesses under review. Again, businesses in your industry is what you're being compared against. And a lot of financial institutions around the world use this. So do over half of the top 25 P&C insurers. So insurance issuers are using this. It's the #1 score used by credit issuers too, credit card issuers. So if you're getting credit card, if you're getting insurance, Experian is a really big deal. Industry leaders in transportation, manufacturing, technology are also using this as their primary risk gauge. So Intelliscore, super important. Now, it's broken down into 5 different components here, or it's broken down into multiple different components here, and I'm going to go through all 5 with you. Because unlike D&B, where the Paydex score is based just on how you pay, there's 5 factors that calculate into Experian, as you can see here. Let's look at all of them. 5 to 10% obviously has to do with your payment history, how you've historically paid your bills. Current payment status, trade balances, percent of accounts delinquents, 50 to 60% of scores. Not what you've done in the past, what you're doing right now. Current payment status, current trade balances, current percent of delinquent accounts. So what they're saying is what you've done in the past matters, 5 to 10%. 50 to 60 is where you are right now, which is why it's so important. Credit utilization rate of 10 to 15% is utilization. Company profile, age of business, industry risk, and size of business, 5 to 10% of your score. We see this trend again. Size of business, industry are calculated in. Derogatory items, liens, judgments, collections, public records, 10 to 15% of your total score. So here's what I think is interesting. 5 factors that calculate your score. But let's look at the high end of these ranges. 5 to 10% of scores, payment history, 10% on the high end. Payment status, how you paying your bills currently, 60% of your total score. So we're at 70% so far. Derogatory items, liens, judgments, collections, 15%. So as you've seen here, 85% of your total Intelliscore is based on how you pay your bills. It's that simple. Other factors, utilization and public records and other things your industry do calculate in. But up to 85% of your score is how you pay your bills. It's always what's most important in the commercial world by far. And by far, what I mean is that in the consumer world, 35% of your FICO is how you pay your bills. 30% is utilization. Like those two are almost the same. So FICO is saying in the consumer world, like your utilization is almost equally important to paying your bills. In this world, overwhelmingly, how you pay your bills is what's most important. 100% with Equifax Experian of your score, with Equifax and D&B. With Experian, it's 85% of your overall score. So over 800 aggregates, but the reason I pulled the slide up is that the picture risk of going over 90 days late. So if we look at D&B, Equifax, and Experian's main scores, they all are calculated the same way. Your risk of going over 90 days late in the next 12 months, Intelliscore takes into account your risk of filing bankruptcy over the next 12 months as well. Okay, they also have a financial, or an FSR, what's known as the financial stability risk score. 1 to 100 is the score, and they have 5 risk classes, 1 to 5. The risk class puts businesses into risk categories. The highest risk is in the lowest 10% of accounts. So a score of 66 to 100 and a risk class of 1 means there's a low risk of default or bankruptcy, but a score of 1 to 3 and a risk class of 5 means there's a higher risk. So bottom line is they're seeing how high your risk is, and they put you in 5 separate risk classes to tell people based on the risk class alone without the score, how much of a chance you have of filing bankruptcy. Remember, D&B, Equifax, Experian, they all have a financial stability score. They all have it, guys. It all gauges your risk of going bankrupt over the next 12 months, okay? Predicts the potential of a business going bankrupt, as we mentioned, severely, and it uses these things to calculate in, okay? Severely delinquent payments of 61 and 91 days, high utilization of revolving accounts, tax liens, judgments, and collections, risky industries, again, short time in business. All of these things will make up a higher financial stability risk score. This is where I see a 6, like out of 100, a 6 being as bad as you can get for people that have no credit reports or scores. Nothing on your credit report. You're given a 6, and you're given it because if we look at these factors, there are no delinquent accounts. There are no accounts reporting, so we can't use that to factor in. High utilization, there's no accounts reporting, so there's nothing to calculate into the score. Taxes, lien, judgments, collection accounts, there's nothing reporting. So none of this is used to calculate your score. Risky industries. So what happens is they give you a failing score even if you have no credit, only based on your industry, because as you can see, the other 3 of the 4 factors that are used to calculate your score aren't present. So when they know you exist with Experian, they give you a failing score and they show that you're almost a high risk as you can get a filing bankruptcy because they don't have any information about you. All they have is your industry and they see you're in a high risk industry, and that's why they give you a failing score. So one more reason that having that right industry is just so important for you to have a good score. And Jethro says, do you provide a free virtual address? I know of nobody that does. No. Chris from Periscope. Periscope, what's up? I've caught this mid-podcast. Will this be posted on YouTube? It'll be posted on YouTube, but Chris, it's available in Periscope as well. If you just go back when this is done, you can access it right in Periscope, YouTube, or Facebook. What is your email address? info@creditsuite.com. And Dane says, awesome, I have a 740 FICO. I just have to switch location. Yes, even if you haven't switched location, we can still help you get up to $150,000 in the credit line hybrid. I just scheduled my appointment with Steven. He's awesome. You'll love him as well. And then I'm going to go in and what's a virtual address? What is a virtual address? It's where you rent an address in a big high-rise building in Tampa, Florida, for example. It's not a P.O. box, so it really looks like you have that physical address. So hopefully that helps answer that question. It's hard. Okay, let me go answer a couple of the questions. We'll jump on. I'll keep move on. Greatness. What if I have both manufacturing and business that's in training education? Both of those are low-risk industries. You should be fine. Candace says, I was blessed to open my business in March and have clients. However, I can obtain the funding for equipment needed to run my business. Yes, we have equipment financing and leasing. You can get a virtual, and somebody else answered that question. Awesome information. I ordered the Credit Secrets book, and there was one focused on business credit. It is helpful when someone explains it. Yes, it is way easier. And we've got a ton of information on our social channels as well. And I'm going to give you a shortcut to build your business credit before we wrap up today as well. And I'm on your tier 1 open accounts, paid them all. I'm assuming you have to wait. Some of them report every 30 days, some report quarterly. If you're our client, we tell you that in the back office. If not, give it some time, but check back in 30 days. Can you establish and build business credit with existing tax liens? You absolutely can, but I would work on getting those UCC filings off your credit report if you can. Courtney says, do you suggest having the correct NAICS code from the beginning? Yeah, you need to. You need to figure out what it is and get it corrected from the beginning, or it's a nightmare if you don't, as you've seen. Just sign up for consultation monitoring. Awesome, Jeffrey. Look forward to meeting with you. Is a staffing industry a good industry? It is a good industry. It's not looked at as high risk by a lot of lenders and credit issuers. So we do have a blended score from Experian, blends consumer and commercial credit together. Okay, 53% of the time, the first signs of credit problems per Experian were on the business reports, but 46%. It was on the personal reports. That's why they tout that the blended scores are better, okay? But again, these aren't really common because in order to have a blended score, they have to get your permission to pull your business credit or pull your personal credit report. And most credit scores don't need your permission. So you rarely see a blended score, but it does exist out there. So if you ever ask for your permission to pull your consumer credit, know what they're using it for. They're using it to pull a blended score. And if you don't want that, then don't give permission to pull your consumer credit. It's that simple. And these are a couple of our clients, the samples. We went to our bank to get business line of credit, turned us down. We got started with Credit Suite, set up our business credibly, built our business credit. After following the steps, we now secured it for $96,000 and just got approved for no limit Amex. We have 4 to 5 different companies call us every day to give us a loan. That's a good problem to have. We're excited. If you don't have business credit yet and you started with Credit Suite, have the same results. It's pretty cool. I just actually hung out with Mr. Sample the other day. Actually, he was in a mastermind with me, and he's just crushing it, has a tax business, and they're doing really well right now. So Equifax has 5 different credit scores, but I just wanted to show you that so you can get an idea of the results you can get if you're applying this information to build your business credit. So Equifax has 5 main scores. We're going to talk about each one of these today. I'm going to dive in right now. So the credit risk scores, well, this is the key factors or evidence of non-financial trades ever cycled. They're basically looking for delinquency on non-financial accounts. Length of time since the oldest financial account opened suggests lower risk. Available credit limit on revolving trades suggests lower risk. Company size, number of employees being higher suggests lower risk as well. Okay, the business credit risk score depicts, again, the likelihood of going 90 days late, right? That's the main score from Equifax over the last 12 months. Ranges from 101 to 992. Lower score indicates higher risk, the same as almost all commercial credit scores work. They also have a credit risk score for suppliers. The score predicts severe delinquency or charge-offs on supplier accounts or bankruptcy over the next 12 months. Its score ranges from 101 to 816. Okay, so that is something that's basically used for anybody that has dealing with supplier accounts. Then we've got their main score, or the business failure score, again used to depict the likelihood of filing bankruptcy. And that score ranges from 1,000 to 1880. And I don't think I mentioned this, but their small business risk score, the main score from Equifax, ranges from 0 to 100, with 100 being the highest score. The small business failure score, as we talked about, the length of time since the oldest financial account was open calculates in. Total balance of total credit limit utilization calculates in. Worst payment status on all trades calculates in. Evidence of non-financial trades historically. The score predicts the likelihood of business failing. As we mentioned, 1,000 to 1,610 is the score range. All the bureaus, as I mentioned, have the same score that's used to depict your risk of going bankrupt. But again, they all call it something different. They also have a payment trend, which shows a 12-month payment trend. This is in comparison to the industry norm. Okay, again, industry is important. Measures the average days beyond terms by date reported. So that's important as well. And the payment index compares payments to the industry norm. And here's what that score basically depicts, okay? 90 means paid as agreed. 80 to 89, 1 to 30 days overdue. 60 to 79 is 31 to 60. 40 to 59, 61 to 90 days late. 20 to 39, 91 to 120 days late. 120 days late and above is a 1 to 19 score on the payment index. So again, it's looking based on how you've paid in the past. It's based on your past performance. And then blending scores, we have a blended score as well, okay? So Equifax offers a blended score option. It's for the small business credit risk score for financial services and one for the small business credit risk score for suppliers. Those two are available in blended score versions as well. And both of those use commercial and consumer scores, and they calculate into your overall score. So some of these scores I mentioned with them, they actually offer you variance. They offer you a variant based on consumer and commercial information or just commercial information. But as I mentioned, nobody needs your permission to pull your commercial reports, but they need your permission to pull your consumer reports. So the easy way to avoid blended scores is not let them pull your consumer credit. It's as simple as that. So business credit reports are not always perfect. It's why you want to monitor your business credit reports. You can go to creditsuite.com/monitoring. We are the cheapest in the world to get your credit reports. We integrate with NAV. It's $24. D&B, Equifax, and Experian. You get all of them for $24. It's $250 direct with the bureaus. You can go there. I don't care. But it's $24 to do it this way. And I'll teach you how to get them for free here in just a minute as well. Let me answer some questions. And then I want to dive in and talk to you a little bit more. Here's one of our clients, Marlon, that got over $1 million building his business credit. I'll stop right here. And then I'll come in and answer some other questions. When you use a virtual office location, the location that other businesses use, it doesn't affect your score. The credit bureaus assign a credit profile based on every business with a unique location. So as long as that business doesn't have like a similar name, you're going to be fine. William says, laundromat considered high risk. It's not in the lending world. Monica says, I've had issues getting an Equifax report. I'm using your program and the links don't work for Equifax. Is that always unavailable? Be patient. Equifax just abruptly pulled out of credit monitoring altogether. They stopped issuing credit reports. So that's in a flex right now. A lot of our clients are still able to get it through our NAV integration, but Equifax is figuring out what they're doing there. So we're all in a flex right now. And Anika says, if you receive the EIDL, will that go on to your business credit report? It will not, but they will use your business credit report to determine approval for an EIDL loan, just so you know. And Kay Ayer says, Tampa Bay. Okay, she gets that. Everybody else might not. Okay, hey, Ty Brion said from YouTube, hey, Ty, your older videos show how to get 250,000 business credit without PG. Is it still possible? It's more than possible today. We've not seen corporate credit tighten even a little bit. The credit that does require a personal guarantee definitely tightened and it's loosening back up, but you can get even more than that. There's really no limit. Well, you can see Marlon here. Marlon's one of our clients that's got over $1 million and he's still accruing more and more credit right into him the other day as well. Arctic says, can you get your mail sent to your home but still have a virtual address? You can. As a matter of fact, Arctic, now what they do is they scan your email and they just send it to you. So same day you get a mail and a virtual address, they'll actually send it to you as well. So a lot of people have asked this question. How do I speed up the process? How do I get results even faster? What does that look like? And I want to go ahead and make sure that that is answered for all of you as well. So look, I want to spend the rest of this time just talking about, and I've got to wrap up at 3 o'clock here in about 11 minutes. So I'm going to go through this pretty quick and then answer any final questions and wrap up because I've got a podcast interview to do. But I want to talk about how you can do it all. If you want to get your fundability set up the right way, if you want to build business credit, if you want to get financing all in one place, then I want to talk to you about the fastest way to do that. So as an entrepreneur, I think you should be able to get the money you need when you need it, but not knowing what it takes to get approved for these accounts, not knowing the steps to build business credit, not knowing how to get all the funding that you can get in one place is a problem. We've got a product called the Business Finance Suite. It's what we're known for. Okay, we're the #1 in the business credit space because of this. And it basically does all three for you. It helps you get your fundability set up, build your business credit in months, not years. And it also helps you basically access all forms of funding in one place. So to give you an idea of what you get when you work with us, this is it. You're getting 24/7 access to an online system that will walk you through step-by-step the process of building business credit. You can do it in English and or Spanish. Our business advisors will coach you and walk you through the entire process. You get help with setting up your business name, your entity, your EIN, your business address, your phone number, listing your phone number with the right directories, setting up your virtual address, getting your website, your email address set up, making sure all your compliance stuff online that lenders check out is in check, setting up a bank account, a merchant account. We help you set up your profiles with Dun Bradstreet, Equifax, and Experian, including your DUNS number with D&B, including your BIN number with Experian. We help you dispute any inaccuracies on your business credit report. A lot of people said my NEICS code's wrong. This is wrong. This is wrong. How do I fix that? We help you go through and dispute and fix all of those inaccuracies as well. We have the largest supply of vendors that can help you start building business credit. You guys hear me talk about this all the time, but to let you in on a little secret, I only disclose 15% max of the vendors we have. The other 85% I never disclose in publicly accessible training because it's an agreement I have with our clients and partners to keep that under wraps. So our vendors that start building business credit, you can get SEO services, website services, marketing services, get stuff you're really going to need while building business credit at the same time. We have the largest selection of retail and fleet credit. Amazon, Walmart, Sam's Club, Costco, BP, Chevron, almost every major fuel station and retailer we have available. Not just available, but we say their underwriting guidelines, special links to get approved. We give you 4 different qualifications to tell you if you qualify or not, so you never apply for credit you can't get. Where it reports to, every nuance that you need to know to get approved, we disclose. So that way there's no guessing. You say, I want this account. I qualify for this account. Here's how to get it. And you go, you get it, you get approved. You don't have to go through this trial and error of applying and getting denied. We have the largest supply of cash financing, Visa card, MasterCards, auto financing, cash flow financing, unsecured credit lines as well, asset-based financing, SBA loans. All of that is available through our business coaches in our business finance suite, as well as with our team. So well over 12 grand worth of value. And if you are getting started through Friday of this week, just because you stayed with me and hung out for an hour, then we're going to give you a 30-minute bitching and business coaching call with an advisor, 90 days up for free of credit monitoring. That's 700 and I'd say it's $594 here, but now that we add the third bureau, it's $750 worth of value you get there. And you're also getting monitoring after that for $24. A 28-page valuation report so you could see how much your business is worth and see what you could do to increase the value. A personal branding course. My buddy sells this for $2,000 and I talked him into giving it to our clients for free. He literally charges it for $2,000. It's sweet. Several of my own friends have used this to establish their own personal branding. We're giving you that bonus as well. And we use a really cool widget on our website that combines all these different review sources into one place. So we're giving you that for free as well, which is about $6,000 worth of value. And this is the retail value. If you go to buy any of this stuff, it's what you're actually going to pay. But if you are getting started with us today or through Friday, then we're doing it for one payment of $24.97. So we're actually giving you a 20% discount. We only do discounts like this where we hide them at the end of a webinar or a training where somebody's stuck with us for an hour or 90 minutes. Like it's where we hide our discounts because like we don't want to discount stuff. So if we do any kind of discount, we hide it here where you had to spend an hour and a half to be able to even know it's available. But you have, and through Friday, you get a 20% discount as well as the $6,000 in bonuses. And you're also being able to get that for 7 payments as low as $497. You can get that at creditsuite.com/webinar. So look, if you do this on your own, it's going to take you 2 years to build your business credit. That you're going to be able to do that with us in about 6 months. And we pay for your 411 listing. You don't have to pay anything to D&B. If you look at all the money you save because the stuff is free with us or discounted with us, it's way cheaper to work with us and do it on your own because you don't get all the stuff for free and discounts that you get with our service. We'll work with you on affordable payments. If those payments don't make sense, we'll customize a payment plan just for you. And we also work with services that can finance this for you. And we can even get you funding to be able to finance your enrollment. And if it's just too expensive, we've got offsite programs where you don't work with our coaches. You just do the work yourself using our technology. That's way affordable. So we rarely find somebody that can't afford it when they actually get on the phone with us. So again, to recap, a lot of cool stuff you get with us. Business finance suite, everything you need to build business credit, everything you need to get financing, including all of your fundability stuff, everything involved with getting your business credit reports, getting set up with the reporting agencies, everything like that you're getting when you actually work with us. And then on top of all of that, I want you to have access to an incentive to be able to buy this week if you're interested. And you're getting over $6,000 worth of bonuses, from the coaching call, the 90 days of monitoring, to $24 credit monitoring after that, to business valuation report, to personal branding course, over $6,000 worth of extra bonuses. And again, you're able to get it for payments as low as $500. So if that makes sense, you can go to creditsuite.com/webinar. Is where that special is. It's only available on that one link. You can also give us a call at 877-600-2487, and we'll talk to you more about working with us as well. I've got 5 minutes before I've got to jump into a podcast, so I'm going to answer any other questions you have and make sure that everybody's taken care of. What's the YouTube channel? All of ours are available at the socialmedia.com/credit suite. So if you go to YouTube or Facebook.com/credit suite, that's how you access our actual channel. You can also go to the top right up here, creditsuite.com of our website, and you can access all of our social channels, including our podcast right there. So hopefully that helps you. Can I get the widget, Mindy? Yeah, just go ahead and reach out to our partner success team or your sales team member, and we'll get you that widget because you're already a client. Kimberly says, I'm a client. I have all but a website. Is that a must? You don't have to have a website, but remember, as a partner, you have a website. Guys, we have a partner program where we put you in the business of offering business credit financing as a service. You get a website with that. Kimberly, it's in your back office. So if you're not sure of that, reach out to your partner success team. All their contact information is under contact tab at the top right of your back office. So hopefully that helps answer your question. And Shanada says, what about getting denied credit because you have a virtual office? You're not going to. There's nobody that denies credit because you have a virtual address, but plenty of places that deny credit because you're using a PO box or a UPS address. And can you help delete inquiries? Yes, we can help delete inquiries and derogatory items, but there's no need to, Letitia, because they don't adversely affect your consumer credit profile in any way. As you saw, we just went through all the scores. Inquiries aren't calculated in, so there's no reason to dispute them, but we can help you with that. And Anika says, if I already have established a business address, is it too late to change to a virtual address? It's not. But you got to go back and update everything that had that older address on there. And Breon says, $250K with no social. Also, if you don't need gas cards, do you still have to get gas cards? You don't have to get gas cards to build business credit. And $250,000 with no social. Yes, you saw Marlon on here. Marlon's got over $1 million with no with no social provided. You saw Christine. Christine secured over $1 million with no social. Okay, no personal credit check. You also saw the samples on here. They've now secured over $1 million, all without a personal guarantee or credit check. You can go to our website, creditsuite.com. Look, I think there's like a credibility tab at the top. You can see results and see like well over 100 actual approvals, not just to see testimonials and case studies, but to see real physical approval after approval after approval to see that. But it's well easy to get over $250,000. I just showed you examples today from 4 people that have secured over $1 million. 1, 2, 3 or 4 people today that have done that. And Jester says, thanks, Ty. I have poor credit, but I have $200K in equity in my home. Do you help a startup? Yeah, we do. We have a lot of financing. Business credit works really good for you, but you can also use that equity in your home as collateral to get business financing. Give us a ring, and we'll talk to you about that funding option as well. John says, thanks, Ty, for everything you do. And I appreciate you guys tuning in. Thanks, everybody. And then Salih says, what's the lowest interest rate have you been able to get? 1.3% is the lowest interest rate that we see and recently, and that's on AR factoring. And Joan says, my LLC is a sole prop. Is that bad? I would change it from a sole prop. Sole props are 1 in 7% chance of getting audited. Corporations are 1 in 50%. And a sole prop, you are the business. So if you ever get sued, the business gets sued. I'm not an attorney, and that's not legal advice. But in a world where I teach you how to get credit without personal liability, when you choose an entity that automatically by default makes you liable, that's not what you want. You want to stay away from that. So hopefully that helps makes sense. Kim says, I can't seem to get business credit. I've gotten some new personal credit cards. I need business credit. Kim, give us a call. Let's talk to you about that. We can help you get your business credit reports for free. We'll do a free search with the reporting agencies. We'll give you tips and tactics. And then also go to creditsuite.com, top right of our page, access our social channels, and listen to our podcast, YouTube, Facebook. We've got all kinds of training that'll walk through the steps. You can also grab a free guide at creditsuite.com/live. And that free guide has been downloaded over 1 million times. And that guide will map out the steps to build business credit as well. And thank you all for tuning in. Okay. And I just signed up with Lane and we'll speak with your team today. Awesome, Corey. Look forward to working with you. So Margaret says, payment plan for your services that offered. Yes, it is. I showed you what our payments are as part of this special. It's $100 lower a month as part of the special, but it will work with you on affordable payments. Give us a call. Tell us what your scenario is, and we'll recommend the right product. We've got products that are very affordable that we don't even put on our website. So I'm going to wrap this up. If you have any other questions, I'm not leaving you hanging. Give us a call. I've just got a podcast interview. I've got to jump into at 2:00, so I'm going to do that. 877-600-2487 is our number, 877-600-2487. If you're shy and don't want to talk to people, email us, info@creditsuite.com, info@creditsuite.com. Or schedule your consultation at creditsuite.com/consult. You can schedule a time there. We'll get your business credit reports for free. We'll do a funding assessment for free. We'll give you tips and tactics to build your business credit for free. And then we'll talk to you about working with us too and answer any questions that you may have. If you have any other questions, please go ahead and give us a call or send us an email, as I don't have a bunch more time to hang out. So thanks everybody for tuning in. You will get a replay if you're on the webinar tomorrow. And for those that are tuned in on Periscope, YouTube, or Facebook, you can go to your channel of choice, Facebook, YouTube, or Periscope, and see the replay of this as well. So thanks for everybody for tuning in. I hope you have a great day. Thanks everybody.